All right, let's talk about something you've probably seen all over the internet, online prop trading firms. These are the companies making a huge promise that they'll fund your trading career. Today, we're going to break down that promise and the peril that comes with it.
And you've definitely seen the ads, right? This quote from an industry insider, it just hits the nail on the head. It perfectly explains why these firms have absolutely exploded in popularity. They've basically kicked open a door that for most people was locked and bolted shut.
And this is the dream they're selling. Get a massive $200,000 account, and you get to keep almost all the profits. You trade their money, not yours, all for a small fee to get in the door. It sounds incredible, right? Almost too good to be true. So, how does it really work? Let's dig in.
Okay, so here's our game plan. We'll start with the promise itself, then we'll look at how you survive the so-called challenge. After that, we'll get into the recent reckoning these firms have been facing, give you a solid due diligence checklist, and finally, peek into the future of funding.
All right, first things first, the prop firm promise. So what are these companies really, and what's the business model that's made them so popular?
So on the surface, the idea is super simple. A prop firm is just a company that trades with its own money. In this online version, they give you access to their capital, you do the trading, and you split the profits. You bring the skill, they bring the cash. But the real question is how this whole thing is put together, and maybe more importantly, where's the money actually coming from?
This is where it gets complicated. This is the big controversial secret of the industry. Because for many of these firms, the business model seems to rely on the fees from all the traders who fail the evaluation. Those fees are then used to pay out the tiny percentage of traders who actually succeed. I mean, the CFTC, that's the U.S. Commodity Futures Trading Commission, has even alleged in court that some firms' profits come almost entirely from customer fees, not actual trading. And you got to understand this model to really get the risks involved.
Okay, so before they hand you the keys to a 200 grand account, you've got to prove yourself. You have to run the gauntlet, and that gauntlet is what they call the challenge. Let's take a look at what you're up against.
So you basically have two doors you can walk through. Door number one is the challenge model. This is the most common one. You pay a smaller fee, and you have to pass a test to prove you know what you're doing. It's like a filter. Then there's door number two, instant funding. You pay a way bigger fee to just skip the test and get right to trading. But, and it's a big but, it usually comes with a bunch of stricter rules.
So, if you go with the challenge, it's usually a two-step dance. Step one, the challenge itself. You have to hit a certain profit target without breaking any rules. Make it through that, and you're on to step two, the verification phase. Here, the profit target is usually a bit lower. It's basically their way of making sure your first success wasn't just a fluke. Pass that, and boom, you're a funded trader, and you can start getting paid.
But here's where things get really tricky. The fine print. The devil is absolutely in these details. You break just one of these rules, even by a tiny bit, and you fail. Game over. You have to pay and start all over again. And some of these rules are brutal. Like take the trailing drawdown. It follows your highest profit point, not your starting balance. That means one great trade can actually shrink your room for error down to almost zero. It's a tightrope walk for sure.
Okay, so the industry grew at this insane pace, but that growth came with some serious growing pains. We're about to get into the messy part. The scandals, the payout delays, and the big questions from regulators that are shaking this whole industry to its core.
And you can't talk about scandals without talking about My Forex funds. This was a blockbuster case. It started with regulators swooping in, accusing the firm of fraud and freezing all their money. It looked like they were done for. But then, the story took a wild turn. The firm fought back, and a special investigator appointed by the court actually recommended throwing the entire case out, not because the firm was innocent, but because the regulator had allegedly misbehaved. You can't make this stuff up. It just shows you what a legal Wild West this whole space is.
And listen to the language the special master used. He called the regulators' actions willful and in bad faith. He accused them of obfuscation and avoidance. I mean, this is a huge deal. You just don't hear a major U.S. government agency get called out like that in public. It was a total bombshell, and it sent shockwaves through the entire industry.
And it wasn't just a one-off thing. The fallout from all this has been industry-wide. Suddenly, another massive firm, the funded trader, just stopped paying people out, saying they were doing a self-imposed internal audit. Another one, Apex Trader Funding, started making traders send in videos of themselves physically trading just to get a payout. I mean, can you imagine? Moves like these have, you can bet, absolutely tanked trader confidence across the board.
So all of this chaos, this whole regulatory gray area they operate in,
It all boils down to one massive question for anyone thinking about doing this. Let's say you do everything right. You beat the odds, you pass the challenge, you become profitable. Can you actually trust that you're going to see a single dime of that money?
Okay, so with all those risks out in the open, how do you protect yourself? How do you navigate this minefield? Let's get practical. This isn't about finding the biggest account, it's about finding the company you can actually depend on. So here is your trader's playbook for staying safe. Before you even think about paying a fee, you need to put on your detective hat. And here are the red flags to look for. Are they shady about who they are or where they're based? Are the owners a total mystery? Do they change the rules on a whim? Are their payout methods weird? If a firm is hiding anything about its identity, you should run, not walk, in the other direction. Seriously, transparency is everything.
Next up, you have to compare these firms apples to apples, and that means looking past the giant funding number they flash in your face. Use a framework like this one. The most important thing here is what I call rule friction. Does their drawdown trail your equity? How often do they actually pay out? And critically, do their rules, like no trading during news events or weird consistency rules, completely wreck the way you actually trade? If their rules break your strategy, then it doesn't matter if they offer you $1 million, it's worthless.
And here's a pro tip. It's so simple, but it could save you a world of headache. Document everything. Before you start, take screenshots of the entire rulebook and the terms and conditions. Make sure they're time-stamped. Why? Because if they try to change the rules on you halfway through, you have cold, hard proof of what you actually signed up for.
So, where does all this leave us? Where is the prop firm industry headed? Well, after all the hype and the chaos, it really feels like we're moving into a new phase. More professional, more grown-up phase. And this quote from an industry veteran, Brian Griffin, really sums it up. He says, the hype phase is over. The days when anyone could just throw up a website and call themselves a prop firm, yeah, those are gone. Now, it's actually expensive and complicated to get into this business, and that's forcing the whole industry to clean up its act.
And that's really the bottom line here. The industry is maturing. The new currency isn't how big your promised account size is. The new currency is trust. It's transparency. It's having a rock-solid track record of actually paying your traders. The flashy marketing just isn't going to cut it anymore.
So, look, the path to getting funded is definitely real. The opportunity is there. But as we've laid out, the risks are just as real. This isn't a get-rich-quick scheme. It's a minefield that demands you do your homework. So the final question isn't for me, it's for you. How will you choose your next step?